Welcome to the AI Fin News channel. The most relevant news and analysis from the world of finance and cryptocurrencies.
Greetings friends on AI Fin News. Bitcoin is currently worth $26,300. The cryptocurrency market at the time this video was recorded, predominantly green. Now to the question of the day. This slide displays how the markets have behaved under past US shutdowns. In the last 24 hours, 12,170 traders were liquidated, totaling $31.18 million. The largest single liquidation order occurred on Bybit, cost for $1.83 million. Strategy announces another significant BTC acquisition. Microstrategy has once again demonstrated its commitment to #Bitcoin by making an additional purchase of 5,445 BTC. This acquisition increased the company's total Bitcoin holdings to an impressive $158,245. BTC latest acquisition cost $147 million, bringing the total investment to $4.7 billion, highlighting MicroStrategy's continued bullish stance on cryptocurrencies. Unfortunately for Saylor, which was making a small profit just a month ago, the current valuation is $4.15 billion. This represents an unrealized loss of over $550 million. Sentiment clarifies. If you own Sushi, Reef, ELF, Bico, CRV or INJ, you will be happy to see that more and more of their supply is moving into self-storage. Historically, big waves like this on exchanges are favorable for future prices. Also according to Sentiment, Linear and Decentraland prices were quite modest in 2023. However, they did see an increase in altcoin kit transactions. Also according to Sentiment, prices of some soft commodities continue to rise, exacerbating consumer concerns. Total U.S. debt has risen by $100 billion since it surpassed the $33 trillion mark exactly 1 week ago. Total U.S. debt has risen. Over the past week, U.S. debt has increased by $14.3 billion per day. If you add in $3 billion per day of interest costs, you get over $17 billion per day. At the same time, the budget deficit has become so large that the U.S. issues $2 trillion in bonds over 6 months, causing rates to rise. At the same time, the U.S. refinances its debt at current rates, which have more than doubled. U.S. debt and interest costs are growing exponentially. When will this be called a crisis? The 10-year bond yield has risen more than 400 basis points from its recent low. However, it has now returned to its average level since 1970, which is 4.50%. This is the first time the 10-year bond yield has returned to its historical average since 2007. In the 1980s, 10-year bond yields reached as high as 16% before hitting their highs. This gives an idea of how much Treasury bond yields can rise. Over the last 2 years, everyone got used to wild volatility, and the current stagnation seems strange. But in fact, periods of low volatility have always existed, we just don't remember them. Quantitative tightening. As the chart shows, the pace and scale of balance sheet contraction can vary between central banks. Quantitative tightening. As the Morgan Stanley's Mike Wilson thinks U.S. consumer stocks are at risk. Macron pushes Europe to fight China for $900 billion. Europe must reassert its strength or submit to China, says one official. BBG, everyone is starting a trade war against. Xi is in a deep hole. Macron pushes your trading volumes have been low for the past year. In January, when the markets began to rally, altcoins started to outperform ETH, and the gap has been growing ever since. Trade. According to the NDR basket of leading indicators, monetary, sentiment and macroeconomic models turned bearish in September. According to Case-Shiller, U.S. home prices rose 0.9% in July, a new all-time high. Despite mortgage rates soaring to 7.5% plus, the highest since 2000, home prices have risen for 5 consecutive months. Over the past year, house prices have risen by 5.3%, which is higher than the all-time average. This means that since the beginning of the year, home prices have outperformed the S&P 493 index, which is the S&P 500-7 technology stocks. And that's with 8% plus mortgages on the way up and existing home sales hitting 2010 lows. How can this end well? Nearly 700 U.S. banks have exceeded the commercial real estate, CRE, loan concentration guidelines set in 2006. What are CRE loan concentration guidelines? These are the FDIC's guidelines for how much CRE lending small banks should have. Currently, small banks account for more than 70% of CRE loans, which is $2 trillion. And by 2025, $1.5 trillion of CRE loans should be refinanced at much higher rates. This is despite the fact that office vacancy rates are at historic highs and CRE prices are in bear market territory. A new near record of the year for withdrawals from exchanges has been set. The delta between deposit and withdrawal addresses exceeded 1.7 million. This means that 1.7 million more BTC addresses were used to withdraw funds from exchanges than for deposit. This is the highest buying demand since April this year. Bank of America's private customer debt share continues to remain at a relatively low 21%. This suggests that Bank of America's private clients are currently showing a conservative approach to debt investments. If they don't cheat, analyst, the bottom is not passed until even the most staunch cryptocurrency acolytes begin to fear and doubt that there may not be a new cycle. The bottom of the market is the point of maximum bearish activity. The top of the market is the point of maximum bullishness. Share of Bitcoin miners' revenue derived from commissions, i.e. commissions divided by commissions plus coins mined, is at its highest level, 4%, outside of the hype we experienced in May to July. Total rewards paid to miners, excluding issued, minted, coins, which is approximately 40 BTC. For the first time we have an 80-20 split. Approximately 80% of Bitcoin supply is now held by investors who have held it for 6 months or more. Total value locked in those fee protocols has grown 5,870%, 58.7x, since January 2023 to reach $919.3 million at the end of August 2023. Top 10 LS fee protocols by TVL prices, tracked by the Case-Shiller National Price Index, rose 0.6% between June 2023 and July 2023. This puts us at an all-time, nominal, high and 0.6% higher than June 2022.
Please click on the bell so you don't miss out on new videos, because there will be more to come. Bye bye.